Morning, ladies and gents. Good morning, good morning, good morning. It's going to be a massive anticlimax if you've been listening to that pumped up music to then come into meditation music. But that's the kind of mood I'm in today, right? That's the kind of mood I'm in. So you're just going to have to deal with it, right? If you don't like it, go somewhere else. I'm in a chilled state. All right, I'm in a chilled state. Alright, I'm in a chilled state. But if you wanna learn and earn, that's what we're all about. If you wanna learn and earn, that's what we're all about. So welcome in. If you're new, welcome in. If you're not new, buongiorno, buenos dias, buenas noches for some of you. No doubt. So just got to get my stream sorted out. So for those, we've taken a little, we've taken a little short this morning. We took a little short this morning inside the old RP. Then I thought I'd come and join you lot, right? Some of you lot on the old tubage, right? So I'm up about 800 quid across my accounts. It's a little start to this morning. Nothing cray. So I hope you're all doing well on this fine Thursday morning. Ainsley, it's weird when you say hello to someone twice in one day. I find that very weird. But hello again. Buenos dias, Yaz. Same goes to you, mate. No EDM intro, I know. So you get, and then you come in here and it's like, time for sleep. But you know, we mix it up, right? We mix it up. That's what we do. Some days we're upbeat, some days we're chill, and that generally just goes with the ebb and flow of my my general mood, right? And in the mood I'm in today, I'm in a zen state. My doctors told me I need to calm. I need to calm down a bit. Right, I'm doing too much, so I'm trying to chill out a bit. Right? I'm trying to chill out a bit. So this meditative music is part of that. Even though I'm pretty chilled generally, I'm going to take it up a notch. I'm taking it up a notch, so you're just going to have to bear with me. Aight? Calm down. Yeah, I know, you can't send gifts in YouTube. I know, that's one of the grim things. It's one of the grim things. But if you do become a member on YouTube, you can get fun with the old, lobsters. Right, you can get fun with all that fun jazz. It's about as much fun as you get on YouTube, unfortunately. Apart from... obviously just being just vibing out, right? Just vibing out in this chat. So if you have any questions, the general rule of thumb is if you have any questions, stick them in the comments and then I can answer them for you. If you have any questions or burning topics, and then we can go through some basic things, market structure, that sort of fun jazz, and then also we'll take trades throughout the day as well. So that's generally how it works. Just as a little thing about what you're getting yourself into. Alright, learning and earning, that's what we do, learning and earning. But if you want the full fucking source, don't expect it to be all on YouTube, right? Because it ain't gonna happen. Chicken tikka or kebabs? Chicken tikka or kebabs? Chicken tikka or kebabs? I mean, that's a great question. That is both an option? Well, I have 8 minutes to eat them both. Deal. Signed, sealed, and delivered. Get them over here. Get them over here. I'm on it. I'd have the chicken tikka to start for starters, and then I'd go kebabs for main. What's for dessert, Ains? What we having? What we doing? Something healthy, like a salad, right? Balance it all out a bit. or a cucumber knowing Ainsley with these emojis. So today, right, today's today's PA. Obvious, clear and obvious market maker buy model. Obvious market maker buy model. Aggressive smart money reversal on the low. So the founding principles are: you want to be going long inside of a discount, you want to be going short inside of a premium on the higher time frame, right? So where's price bounced this morning? It's bounced outside of a discount side of that daily dealing range discount. Why are we driving all the way up here? You might ask yourself, why is price aggressively in this buy program, leaving volume imbalances open, fair value gaps left open, not even really running into the breaker block, disappearing? All of this is aggressive price as price reaches for a higher time frame pool of liquidity inside of a market maker buy model, right? So if you go across to the indices SMT chart and we look at the higher time frame, we can see that we have a great big fat divergence on the high. The divergence is with ES taking the high and NQ has not. And what I always say is you always want NQ to do the suiting, the turtle suiting, right? You always want NQ to do the turtle suiting, right? Because ES does not turtle suit, it plays catch up. So we now have a divergence on this high, with ES taking this high, NQ is not. So the divergence is on this high, which is the drawn liquidity for price to get up here, right? So on this morning, and I was talking about this earlier inside of RP. When I first started trading, and to be fair, it took me a long time to get over this, was to get out, to become a more balanced trader and not be so contrarian, right? Because naturally most traders are contrarian, right? They always want to short the top or they want to bounce the lows, right? The old dead cat bounce. But you really want to try and become like the most balanced trader that you can possibly come. And what used to be my Achilles heel were classic buy days and trend days, because I'd always try and catch the top. So over time, over the years, I've learned to develop to become more rounded and get in sync when price is in a buy program, and not always try and short the top, but rather try and get in sync with the order flow, which is bullish, right? And that takes experience, it takes time to do that, but it's really important in your own trading to understand what your Achilles heel is. And for me it was trending days, and work on ways that you can better yourself. They are still my Achilles heel. They are still the days I do not like. You give me search and destroy, I'll rip the market a new a-hole, right? Trending days, I have strategies to trade trend days, my M5 continuation model, that sort of stuff. And I'm usually out in like 30 handles or so. I take my money, I get out of there, right? That's how I trade trend days. There are also certain nuances that I can utilize to get in sync with price action, okay? So first and foremost, what is a trend day and what is a classic buy program? And this is what screws over most newbie traders, right? Because they're always trying to short this, right? Price back, I want to short it, we're on a short it, look how extended we are, we should be shorting it, look how extended we are, let's short it. Oh my god, why is it not going down? Oh my god, I'm about to blow my account. Fuck it, full tilt. Yay! Hello, Mr. Prop Firm owner. Can I have a new account? And then you're up here and you're like, okay, you know what? Oh, I got a new account. I'm gonna go 50 contracts short, and then I'm gonna choke it at 5 points. And then you've made like $1,000, and then you're like, yeah, I feel great again, right? In reality, you've done absolutely nothing apart from pay your broker, right? So learn to become a professional trader and not do that. First and foremost, you need to have your rules in place. So if you do take a loss, then you just move to the sidelines. But more importantly, you want to try and get in sync with this type of price action. And I just spat out a bit of banana. So enjoy that. Right. So how do you do that? Well, premium and discount of dealing ranges. you're looking to get in on a discount. So you're always looking to get in on a discount. Or you can use a nuance and wait for a model. Well, for me, and I'll tell you this model, I'm okay sharing this model because a lot of you need all the other stuff that goes into it to know how to utilize it. But if you have a classic market maker buy model, smart money reversal on the low, and then on the sell side of the curve, right, and this is reaccumulation, I'm looking for a clean pivot high. So when we have this aggressive buy program, and what is aggressive buy program? When fair value gaps get left open, when price just dips into a fair value gap for an institutional order flow entry deal, when volume balance gets left open, when dealing ranges price doesn't return back to a discount. All of this is indication, do not step in front of the train. Right, you step out in front of this train, bam, you're going to get slammed. Bam, you're going to get slammed. Bam, you're going to get slammed. Don't do it. Get in sync with it. So what are you going to wait for? Okay, well, here is a model which I utilize, okay? So if price is in this classic buy program, and we have the indication that price is in a major bullish buy program because of those signatures and price I've just mentioned, you look for a clear swing high to get purged, right? Right here, bosh. Okay, what I immediately do is I clean my charts because I'm not Dave FX. I immediately clean my charts, right? But what I'm looking for is I go to the 5-minute chart, okay? I go to the 5-minute chart and I'm looking at the 5-minute BISI, the very first 5-minute BISI underneath that purge. If we're in the right context before price, context before time. So price purges this high inside of the sell side of the curve in an aggressive buy program where we have context for price to run the high because we have that divergence on the hourly, right? Hello, not just a pretty chart on Twitter. Okay, so this is your 5-minute BISI. So what I look for when I go back to the 1 minute is for price to fill this 5-minute BISI for continuation. And what I'll often look for, because I trade on a 15-second chart, is I will look for a breaker block on a 15-second chart to trade continuation, right? Because I'm using this 5-minute BISI as my higher time frame point of interest, right? So I'm trading on the 15-second to dial in my entry, not right on the 15-second chart, but using this as my higher time frame point of interest. So yes, you can have a breaker block here. Now this didn't even get down to the low of that 5-minute BISI. It could not even fill it, right? It couldn't even get down there to fill that BISI. So all this is indicating is that price is insanely bullish. In ICT terminology, that is an institutional order flow entry drill on the 5-minute, right? So when you see this, and this is my model, right? Now it's just a case of trying to get in sync with this because price is driving up for higher time frame pools of liquidity. That is what it is doing. That is what the algorithm is designed to do. Search for inefficiencies and imbalances in price and search for pools of liquidity. Well, if we have tagged this pool of liquidity and we are now doing an institutional order flow entry drill on this 5-minute BISI underneath, guess where we're going? Hello. Inefficiency in price on the higher time frame. This SIBI. Hello. Okay, so now we just want to get in sync with it. So how do we do that? Alright. Well, we go back to our little 1-minute chart. We get back to our little 1-minute chart. So if we go to our 1-minute chart, we're now utilizing protected highs, protected lows. So this is what's inside of my YouTube channel. So guys, if you do not subscribe to my YouTube channel, you're missing out. You're missing out. Trust me. Trust me, there's a lot of trash. There's a lot of trash out there. I can guarantee you, you know, the basics alone can help you change your life. Just the basics on YouTube. But protected highs, protected lows. So when this low takes out this high, and puts in a new high, which closes above this high, we now have a new dealing range on the 1 minute. After the institutional order flow, let's see if I can do this. Let's see if I can do this. Get some. Right? After the institutional order flow entry. So what is that? We know that that's mega bullish. So the contrarian trader, and this was me years ago, would be like, "Aye, god damn it, we turtle suited the high." Right? We turtle suited the high. Okay, so now let's wait for a market structure shift and let's go short. Let's pile in short. Right, let's go. We're gonna go take the market out, right? But you're completely forgetting the context. Context before price, context before time. So we know that we have an institutional order flow entry underneath a buy side pull purge, and we're in an aggressive buy program searching for higher time frame pools of liquidity. So we're using the 5-minute BISI underneath that purge in order to support price for continuation. We now have an institutional order flow entry on that 5-minute BISI. We're now looking to get in sync with that to drive up to that higher time frame pool liquidity. God damn it! There are levels, guys. Trust me, there are levels. So now we're looking to get in sync with it. So there's this low to this high. So your job is to wait for price to get back into a discount. Okay? So you've now got accumulation, expansion, back into accumulation for distribution. Okay, into this 1 minute discount. Okay, so now you just, if you missed this entry, you're just doing the same. You're just moving this along, right? So this low, which put in this high, you can see at no point did price get back down to a discount. If we were not in this context where price is aggressively reaching for a higher time frame pool of liquidity, your alarm bells would be ringing, because you'd be saying, well, this is now a weak low because it formed inside of a premium, and you'd be absolutely correct. But these are the occasions in a classic buy program where we're searching for higher time frame pools of liquidity, where you have to play extra cautious and until you get to that high time, because price is aggressively reaching for that target, right? So you don't get it here. Now this low puts in a new high. Discount. That would be another opportunity for you to get in. This low puts in a new high that closes above this high. Discount. Does this high close above that high? No, sir, it does not. And you'd be absolutely correct. Discount, discount, fair value, discount. Opportunities to get in sync with price. And what are we going for, guys? Here's the question you've got to be asking yourself. Where are we going? Okay, so if we tag this high, that's what you'd be looking for. Okay. So automatically, if you were in down here, this is where you'd be looking to pay yourself, right? So right on this little turtle suit, and my drawing's absolute shit, but the high is turtle suit is purged. You'd be wanting to pay yourself there, right? You'd be wanting to pay yourself. But price is aggressively reaching for a higher time frame pool of liquidity. So what, or inefficiencies in price. So what do we have up here on that hourly? On the hourly, this higher time frame SIBI. Also, we need to bear in mind where we sit on the daily. Okay, so we are currently at now what? Fair value on the daily dealing range. So what is that? That's an opportunity for market makers to go short or long. So inside this area, this is where you start getting a little bit twitchy-assed if you are still looking to drive price higher. And we actually took a short this morning as well. So again, if you are looking to get in sync with price, this low takes out that high here. Discount. This low doesn't get back into it, and so forth, right? So this low, which takes out this high, discount. Okay, so how did I know to go short up here? How did I know to go short up here? Why did I have this institutional order flow entry on? Well, this is where I'm going. What was the job of that buy program? What on earth was the job of that buy program? Why on earth did this buy program get triggered all the way down here at 315, 312? What was it? What was the algorithm designed to go and do? Well, to go and search for a higher time frame pools, liquidity, and inefficiencies in price. Yes, sir. Okay, so when we're up here and we're filled, all of them, bar this high, you're going to anticipate a period of accumulation or consolidation, right? Especially as you've got high impact news events coming out here, right? So, where do we get this fill? So if I just sync this across my charts, I know you guys like, I know you Twitter folk like pretty charts. Sync in there. Okay, so now we've got the principles of what I look for as a trader. So I am a turtle suit trader, right? I trade turtle suits. So I'm always looking for a purge. So at a higher time frame point of interest, yeet into what? This higher time frame order block on the hourly. You can frame other reasons we're inside this inverted fair value gap as well, blah, blah, blah. We're back up inside of fair value on the daily. Yes, we are. These are all valid. These are absolutely all valid points. Okay, so I'm not going to go into SMT and all this kind of fun jazz, but we had SMT on the low, okay? And I trade different forms of SMT, and I teach that pretty prolifically inside of RP. But we had SMT on this low, okay? Right on this low, on the 46 and 49 candle, right here, between ES and NQ. And we always want NQ to do the turtle suiting. So when we had this turtle suit on this high, into this higher time frame point of interest, this is a daily order block, yeet. This is now setting up a trigger. Why am I always looking for a turtle suit? Because it's the turtle suit that triggers the sell. No turtle suit, no sell. No turtle suit, no buy. Right? So when price turtle suits this high, and you can look at ES. ES does delayed SMT, which is another form of SMT, which I teach. You now have a 1 minute inverted fair value gap. Okay, so even if you didn't want to trade this aggressively, right? You didn't want to enter aggressively on this very turtle suit. And I have strategies to tell you how exactly it's getting on that high. You can wait for your little inverted fair value gap. So what actually price does here, if you go down onto a lower time frame, if you go down onto a lower time frame, yeet, 15-second chart. We now have this low, which put in this high. And so what we are looking for is price to mitigate that range on the high. Oh, hello, baby. Hello, baby. Right? Now we're talking. Mitigation. Looks like nothing on a 1 minute chart. Absolutely nothing. But then price breaks, comes back, leaves you with an inverted fair value gap. Now we know on the 15-second chart this range is mitigated, so price has no reason to go above this high. So this now becomes your swing high that you do not want to see broken above. Okay, so you can enter inside this inverted fair value gap. And now you're anticipating a lower time frame break of market structure to lead to a higher time frame break of market structure. This is all on YouTube. So we now have a 15-second break of market structure, which I've just shown you. The 1 minute low is down here. So this low, which put in a new high, that would be your protected low on the 1 minute, right? So now you've got a 15 seconds leading to a 1 minute, leading to a 5 minute. Okay, so if I'm anticipating the 1 minute to get broken, I'm going to go to the 5 minute time frame to look for a discount. So the same principles apply. We are looking for the low, which puts in a new high. That is your 5 minute dealing range. Okay, so we know we've had a 15-second break of market structure. We know that we have SMT on this low. We know we have an inverted fair value gap. We know we've mitigated on the 15-second. We know that we're at a higher time frame point of interest on the higher time frame. Boom! Levels. There are levels to trading. So we now have a 1 minute protected low, and we're anticipating this to get broken. Why? Because it's still inside of a premium of a high time frame dealing range. What dealing range? The 5 minutes. So this is a weak low. Weak low. Weak lows. SMT discount range. 62%. And some of you, you'll be going, what the fuck is this guy talking about? Well, if you just want to go, just tell me where an OTE, just tell me where the OTE figure is. Just tell me where the OTE figure is. If that is your mentality, you're going to stay poor for the rest of your life. You're going to stay poor for the rest of your life. And in 20 years' time, if you're still poor, rewatch this video, right? So price comes back all the way down to a discount of the 5 minute dealing range. All right, trade complete. Trade complete. Right? Yeet. Lower time frame breaker market structure into a higher time frame discount. Okay, so what is price now doing? Well, price is now consolidating, right? It is now consolidating ahead of what? News. So what we can do is we can look at this range, this high and low, and we can anticipate price just to bounce between a premium and discount of this higher time frame dealing range. Right? We can anticipate that. So price is now moving from a back into this inverted fair value gap, premium, fair value, right? This is your discount range inside of consolidation. Okay, so yes, I have strategies for trading search and destroy. Essentially, you're playing liquidity tag. But you want to be mindful that we have news today. So when's our news? We have news at 8:15. That's the euro doing their monetary policy statement. And then at 8:30, we have unemployment claims. Big news drop there at 8:30. So at the moment, I've fulfilled my objective today, taking this trade, and I'm also went long out of this up into here. So these are my 2 trades today so far. So what I'm mindful of is, okay, so what could I look for today? Well, we have this previous day's high up here, which is up at 79% on the weekly dealing range, right? Which is actually where price rejected yesterday. Okay, so 62% on the daily dealing range, 79% on the weekly dealing range. Okay. Now, if price takes that high, this high right here, it's going to take this divergence on this high, right? Right, which is the high that I'm looking for to go. So at the moment, what I'm looking for on news is for price to take this high, take that previous day high for a potential short to go run these lows out, right? So my main point of interest at the moment is up at 225 on news, right, which gets us back up into this 70.5 on the daily dealing range, right, for a pullback. So you guys need to know, and this is like a little bit, you know, added source. So if you have an inside day, and we called this yesterday, I said yesterday's going to be an inside day. Why was yesterday going to be an inside day? Why did I anticipate yesterday to be consolidation? Well, it was to do with Dixie, which we'll touch on in a minute. But this this inside day, usually 2 days after an inside day is when you get aggressive displacement, right? 2 days after. Go back through your charts on your daily and look for an inside day, and then look for 2 days later. Inside day, 2 days later, displacement. 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 Right? So more times than not, 2 days after inside day, you're going to get displacement. Right? So today I'm not looking for a massive range. I'm not looking for huge range today. All right, I'd anticipate that to take place tomorrow on Friday. All right, so what I'm looking for is a turtle silk on this high. Let's go run this high, this SMT up on this high, right? To then pull back down into the range. Right? Bear in mind, that we have news at 8:30. Okay? So I hope you learned something this morning, this little sesh. So at the moment, I'm just sat patient, waiting for news. Just sitting on my little bank this morning. Just waiting for news. But this is search and destroy. So you'd anticipate price to come run back down into a discount. Where's the liquidity on this low, right? So these are kind of things you want to be paying attention to. But it's high risk. Oh no. Oh no. Let's get rid of him. Let's get rid of him. Go. Let's get off my chart. There you go. Just say can't make when price flying it. Misty Phil got it. It's the guy's name who I can't say. Mathan Analytics, that was it. No, Math Analytics, that was it. He's back. The guy's back. Let's see what you guys are saying inside of RP. Morning gangsters, morning AP, mate. Do you not consider the divergence of 53 on the highs as well? Of 53. What time frame are you on? And what are you talking about? Which index are you talking about? Context, bro. Give me some details. This is exactly what I'm talking about. This SMT on this high is what I'm anticipating price to go and run on news, right? To go and tag this divergence on the high, this SMT on the high. So that's what I'm looking for. I'm looking for it to go and drive this high out. Is that your question? The one above, all the way up here. Yeah, it could potentially get up there. There is a divergence up there. Whether it gets up there today or not, jury's out. But for me at the moment, I'm just looking for it essentially to get up and mitigate this range on this high on the hourly, right? So this range when we broke here on that hourly is currently unmitigated. So at the moment, I'm just looking for it to get up into here. And also, as I mentioned previously, I'm not looking for huge range today. I anticipate that to take place 2 days after an inside day. So at the moment, I'm just looking for it to get up in here for a potential pullback into the range. You've also got to consider my X levels as well, right? And how extended we are off this low. Okay, so you're going to anticipate a pullback at some stage today, right? But for me, the divergence at the moment is on this high, right here. So I'm anticipating NQ to come run this high. But for me, I'd like them to do it on news. So that is incredibly bullish. Insanely bullish. So these are honestly, guys, these are the days when a newbie trader gets absolutely wrecked because they're always trying to short it. If that's you today and you've been caught short, Like, you want to stay super patient. Super patient. Where is that? Just bear with me. I'm just looking at my own stuff. So 225 is my point of interest at the moment, essentially mitigating this range. It's the wrong line. So a quick look at ES. So again, you want to keep your eye on ES on this high. If ES takes this high before NQ, that's your strong indication that ES is going to go run that high. So guys, if you're on YouTube, welcome in. Feel free to smash a like if you've learned something this morning. That's what it's all about, learning and earning, right? Staying super patient. My style of trading is I'm a turtle suit trader, and I trade at higher time frame points of interest. I trade about 3 times a day, and I'm looking to capture a daily range. I'm not your every swing trader, even though we can trade that. It's not my style, right? So, taking a long and a short during London today already. So now I'm just sat patient. I'm currently waiting to see if price gets up to 225 for a potential short, using data to get us up there. But this is an example where if price is extremely bullish, it goes out the premium side of a higher time frame dealing range, right? So this is our dealing range on the 5 minute. So price coming back down to a discount, coming back down to fair value, then going out of the premium side of a higher time frame dealing range. So it's mega bullish. Like again, if a newbie trader would be looking at this going, there's a turtle suit here, right? You know, let's look to drive out these, go and run all these lows. Dangerous. It's dangerous. Patience. Step in front of a train, you get wrecked. If anything, you'd want to be getting in sync with price, right? So essentially, if you look at where price is on the daily, right? This is our fair value. So So this here is fair value on the daily time, on the daily. So fair value, back to fair value, right? This is all bullish, majorly bullish. Like trying to jump on this short is going anti the higher time frame order flow. Contrarian. So if you're on Twitter, feel free to come join over on YouTube. You're more than welcome to do that. If you want to get involved with the conversation, you're more than welcome to do that. I can't see, if you put any comments on Twitter, I can't see any of that, guys, alright? Because I'm over on YouTube and I can't pull your comments in. So if you say anything on Twitter, I'm not going to see it. But if you jump into YouTube, I'll be able to see what you say, alright? If you want to ask me any questions or anything like that. Okay? So I'm just laying it out there, guys. The link's in the comments if you want to come and join it. Yeah, we're bullish, AP, mate. 100% bullish. 100% boobish. We've also got that hourly SMT on the high, right? The hourly SMT on the high. I can't read. What have you written there? Can you explain the Fed day accumulation pattern? I'm not sure what your question is, bro. Can you explain the Fed day accumulation pattern? I don't think I've ever spoken about a Fed day accumulation pattern. Thursday, February 1st, sure. Thursday, February 1st. Thursday, February 1st. Why on earth do you want to talk about that? Don't believe so, bro. Don't believe so. If it was a stream back there, I can't remember specifically what I was talking about back then, bro. Honestly, I can't remember. I honestly can't remember. Might have been was it opening range breakout? Was I talking about that? I'm not sure. Not sure what the question was, bro. But there's no like specific Fed day accumulation pattern that I trade, bro. I think you might have the wrong guy. The only thing, you know, just visually looking at this at the moment, you know, this is maybe what we were talking about, maybe where you're getting confused. Is if I see a range like this, okay, so this is a higher time frame range which has not been rebalanced. What do I mean by rebalanced is that prices never come back to fair value or a premium of this dealing range. Okay, so this will be a higher time frame dealing range. If I went up to my 15-minute chart, that's going to be a dealing range, right? So there's something called accumulation inside fair value. All right, so when price accumulates inside of fair value, right, which is what it's doing here, okay, you can anticipate price to return back to 50% of accumulation for continuation, right? So this would be an entry inside of fair value to go and drive price up into fair value, right? Ultimately getting price back up into a premium, right, of this previously unbalanced range. Okay, so this is accumulation inside fair value. What is fair value? It's anything below 50%, right? So if price is super bearish, it's not going to get back above 50%. It's going to struggle. If price is super bearish, and the light bulb will probably drop for a lot of RP traders when I say this. If price is super bearish, it's not going to get back above fair value. What do you think I mean by that? Okay, but if you're anticipating price to move higher and this has reached a higher time frame point of interest, okay, right, higher time frame point of interest, so you're anticipating price to reject this level and move higher, you're then looking for accumulation inside fair value to be in a net position of longs, so a net accumulation of longs. Okay, so the way that you trade it is you wait for price to get back to 50% of fair value of the accumulation, right? So this low, this high, to then take your trade long, right? If you're looking inside this is also broadening formation, but this is something completely different. You're looking for balanced price range inside of to go long. That's something completely different and not ICT specific. But I hope that answers your question. I hope that's. I think that's what you may have been talking about. Not sure, but maybe. Maybe, baby. Yeah, so it's essentially just accumulation inside fair value, broski. So you're looking to go off 50% of the accumulation inside of the discount range of that high time frame dealing range. Okay, once price has reached its higher time frame point of interest, you then look for a range which has been left unbalanced. You're looking at fair value, anything below 50%. You're looking for accumulation inside fair value. You're looking for price to break out, return back to 50% for continuation to go and rebalance this range, fair value, and a discount, right? This is where you'd be paying yourself, and then if you want, you can hold runners to take out that high, right? So this would be your high, right? So this would be essentially taking internal range up to external range, right? Make sense? Understand? Chow with me. Ugh. So again, if you're sat there and you are itching to short this, please take my advice and don't. Have patience. Have some goddamn patience. You have all day. We have all day to take a trade. Do you see me just jumping in loads of trades here? No, you don't. Patience. So let's have a look. So don't forget it's split news today. So we've got unemployment claims at 8:30, and then you've got Powell speaking again at 10. So I know for a fact that there's going to be Twitter traders out there now on their streams trying to dump this. It's just so high risk in these conditions. Like, it's like so high risk. ECB rate at 8.15. Yeah. For me, I'd want it to be going. If I was to be trading, I had a gun to my head, and they said, "Look, TradeX, you must take a position." If anything, I'd be wanting to go long. Yeah, ECB press conference at 8:45, right? Yes, sir. Yes, sir. Yes, sir. So I hope this music is making you feel a little bit zen, right? A little bit chill. Right, if you're an over trader, right, which is like the disease for any trader, over trading, right? The moment you realize that trading less, you actually make more money. Hopefully this music is helping you on that journey, right? Just chill. Slow down. Slow down. Unless you like paying your broker, right? Playing your broker, trade less. So these little trades that you see where people are taking like 100 trades in a day. 80% of that is going out in broker fees, right? So it might look great, that little P&L. Yeah, you throw in your commissions and your net is going to be like 10% of that. Right, 10 contracts short for 3 points. 10 contracts short for 3 points. 10 contracts short for, you know what I mean? It's like, if you enjoy paying your broker, do that. Area 51. You got a cool name, bro. I like that. Target was 34. We'll see 17. We'll see 17,763 today. Okay. Okay. It's a big old thumb, broski. I definitely agree with you that macro bearish. I'm definitely on board with you there. But yeah, I agree with you. If price does go on and melt, that level is a level I agree with. I've actually got 17,775, area 51. Without naming any names. Literally, bro, like, no idea. My guess is it's not. My guess is it is not. So I'm personally wanting to see this before I go short. For me personally, before I look for short, I'm wanting to see this SMT on the hourly taken out on NQ, right? So I'm wanting them to do that on data, so on unemployment claims. So I am not jumping on this short. Hell no. News tomorrow. So tomorrow, let's have a quick goose. So a quick goosey gander. So tomorrow we've got the old NFP tomorrow. So for me, just in terms of the the way that the daily is currently set up, yes I agree we could have an absolute carve today. Completely agree with that. However, for me it's more likely to go tomorrow. And it's purely on the premise of having an inside day yesterday. The price will usually displace aggressively 2 days later. So yes, it can do it today. But I'd more likely that takes place tomorrow. Okay, so my point on Dixie. So for Dixie, I'm looking for Dixie to go and carve all these lows out. Right? I'm actually looking for Dixie to go and get below 100. So this is what I was saying yesterday. Dixie's got to play catch up. So for anyone who's been watching my streams for a while, we know that we were projecting this exact high on Dixie. We were anticipating price to break out this SIBI on the low, and then we were anticipating price to come and pull back up into the lower quad for continuation, right? So it's doing absolutely everything we've called out. So now what I'm looking for is, now Dixie has been in this period of consolidation for a while, and obviously we've had some range on the indices. I'm looking for Dixie to play catch up. Now what can happen when Dixie plays catch up is the indices go into a period of consolidation. Okay, so yesterday we had this displacement on Dixie, and if we actually look at the indices just went back and forth. They didn't actually, we just consolidated. So so today is actually a good day if you trade Forex to trade short Dixie, right? However, I don't go near Forex, so but I apply that to how I trade indices. So today I'm anticipating Dixie to carve. I'm anticipating Dixie to carve today, but I'm anticipating the indices to go into a period of consolidation, right? Ahead of non-farm tomorrow, where I'd anticipate, right, then to get into some form of synchronization again, because at the moment everything's decoupled, right? So I want to see Dixie carve and get all the way down, take out all their sell side today, right? And work towards this low. So ultimately I'm looking for Dixie to get all the way down here, take out this low. Right? Which also plays into my bias for the premise that I'm not anticipating the indices to go on an absolute carve today, because I'm anticipating Dixie to do that. So we've had range on the indices. Now I'm expecting range on Dixie. So if you're wondering what all these are on my charts, these are discount and premium ranges of different dealing ranges. So whether it be the daily dealing range, the weekly dealing range, this is a 5-minute dealing range, which is now actually changed. So it is now moved up into this high. All right, so this high, which put in this low, sorry, which put in this high that closed above this high, so this is a new 5-minute dealing range. So again, if you are going short here, you know, that's what I'm saying, it's high risk. If I was to do anything, I'd be looking to trade price long. You know, it's hella risky. Hella risky. With that divergence on this high. So my point of interest at the moment is 225. 18,225. So I'd either want to be holding longs, which I'm not. I've already taken my short. I now I don't want to go long. Personally, for me, as we're now extended and we're also above 50% of the daily dealing range. So for me, I go long in higher time frame discounts. I go short in a higher time frame premium. Well, we are now above fair value on the daily, so it's, for me, the probabilities reduce the further we get closer towards being inside of a premium. So although I'm anticipating price to take out those highs, I don't necessarily want to trade it long in a higher time frame premium, because as soon as you do that, your probabilities reduce, right? So the safe place to go long was anywhere inside of here, right? A PDRA or anything that you were utilizing to get in sync with price. Well, as I've mentioned previously this morning, it's using this 5-minute BISI underneath a purge in an aggressive buy program inside of the buy side of the curve after sweeping the pivot high inside of accumulation on the sell side, right? Looking for a 5-minute BISI for continuation. The 5-minute BISI underneath that purge. In this instance, we just got the institutional order flow entry drill. So this was your opportunity to get in if you missed all of this, right? Your last low risk entry. Or you could have gone back in here, which was fair value on the higher time frame. But anything above this is now, for me, I just want to wait for price to get up into the highs for a potential short. But for me, it's not cooked yet, right? It's not cooked. So everyone who's trying to jump in short here on Twitter is getting frustrated because they're like, well, why is this not dumping? We've done the turtle suit. You know, it's not cooked yet. Patience. On a buy day, in a buy program, you have to exercise patience. Let's have a quick look at the SMT charts, keep abreast on that. Let's jump down to the one. So we obviously know that we've got that high time frame. SMT on the high. It's everything you'd want to see on the lows, right? You've got this little, you got a higher low put in here on ES. Ideally, you'd want to see NQ turtle suit that low, but it's fine. ES didn't take that low, so it's fine. So this 5 and 15 minute dealing range is the same. So again, same principles, prices bouncing between a premium and a discount of this higher time frame dealing range. So news in half an hour. Person just sat patient. As we sit at fair value on the higher time frame. So we're currently at fair value on the hourly, right? Oh, sorry, on the daily, not on the hourly. Can't get rid of that dot. Get off my chart. Get off my, there you go. Yeet. Boom, boom. So if you just a little thing for you, like just a very little thing, like if you just want to improve your trading remarkably drastically, if you're a newbie trader, go long in a higher time frame discount, go short in a higher time frame premium. If you can just literally just adopt those principles, you'll put yourself on the right side of the fence more times than not. Right, so the habit when you start trading, it's like, well, okay, we've broken this low, let's do a breakout trade, let's go drive out these lows. Fuck, I missed this high, you know, it's obviously going to go run these lows now, right? But what you're unaware of is that you've now reached a higher time frame discount, and so this is where you now get your pullback, right? So if you want to go long, you go long inside of a discount. If you want to go short, you want to go inside of a premium. It's very, very simple, guys. It's basic, it's mechanical stuff. This is as mechanical as you can make your trading. Just go inside of a discount. Go inside of a premium to go short. Like if you find yourself shorting inside of a high time frame discount and you keep getting chopped up, right? You gotta ask yourself why. Okay? You wanna put probabilities in your favor. Rule number 1, go short in a premium, go long in a discount. Who's on? Good morning, Jay. Bum, ba, bum, ba, bum. A little bit balanced price range on the low. Hello, you. How are you doing? Hello. Where you been, bud? Yeah, love you too, bud. Oi. Right, 2 secs, guys. What was your message area which you retraced? I want to know. Oh, bro, you have no idea. That cat is better than most. Knows how to turn the mic off. I tell you that much. Just comes over and just nuts this mic. Shut up, X. Go to sleep. Man, he was out of there, mate. He was like, I'm not staying around for this. Got some squirrels I could be going to eat, you know. So currently a big gap up. In between those two gaps at the minute. So 15 minutes till news. Guys, what I'll just, as we wait 15 minutes, I'll just give you a brief overview of how prop firms work and why you should not trade going into news. Okay, and I talk to you about this through experience, right? So I'm not trading up until news, right? This is what I'm talking about. Prices bound, we're consolidating, right? Premium discount, right? So we've spoken about all of that. We'll just do a little overview on prop firms, right? So depending on who you work with, right, what you need to be aware of that they're just third-party applications. So this is the main broker. So in my instance, I use Ninja as my main broker, right? And here is me, right? You, right? And then here is your prop. Right. So the way that works is obviously you put your money into the prop. The prop has a add-on into the actual brokerage who have access to the marketplace. Right. So the traditional way and how I also trade is I have personal funds that go directly into a direct-to-market broker and also using prop firms. So depending on which way you go, but most people are going in through this way. Now this is what you need to be really careful of. Around high impact news events, because of the volatility and they don't want to get slapped, and the very nature that there is a delay between the information coming from the director broker brokerage and the third party prop firm. So the delay in that data transfer, there's naturally going to be a delay because they are not direct to market. If you're direct to market, it's instantaneous. If you're not direct to market, you're not. There's a delay. So during high impact news events, there is a natural delay. And given the volatility in high impact news events, what they do is they don't want to screw themselves over or have issues in terms of stops and TPs and that goes anti their favor, anti their position. So what they do is they have a holding pen, right? So if you place an order around high impact news events, your order just gets sat into a holding pen, so to speak. Okay, so this delay is naturally, let's just call it 0.2 seconds, just by the pure nature that there is a data transfer. But the volatility at high impact news events can be such that you've moved 50 points in 0.2 of a second, right? So what they do is they had this delay here between these two, which is like 5 seconds. Okay, so when you place your order around a high impact news event, okay, and you set, for example, say this is your entry, and then this is your TP, and then this is your stop, what can happen is in the actual market, right, price can run down, hit your TP or hit your stop, run up and move back down, right? But the time they have released your position and they have caught up, what's actually happened is that they see it as your TP has been hit, right? So it closes that position, but then it catches up with the actual data. And so what's actually happened is you've now flipped one short. And so you'll often get it if you trade data, right, around high impact news events, where you'll delay and then you'll the thing will completely, you know, go fucking AWOL, and you'll just be left with a negative position when you didn't. That's just not the case, right? So, and the reason for that is this: it's the delay between the actual data coming into the prop firm from the direct to market to the delay on the holding pen of your actual trade, and this is what fucks up trading around high impact news events. So every prop firm will say it: do not trade around high impact news events, and this is the exact reason why. Because they put your position is essentially in a holding pen because of that volatility, and it gets released late. So what can happen is your position can get filled live in real time, but by the time that they have released that order, the market it's now catching up with itself. So it takes into it now has thought you have hit your position, and now it flips you short. Okay, and before you know it, that's now gone run 100 points down, and you haven't got a stop loss. Your stop loss is now no longer in place, right? There is nothing you can do about that. Zilch, nada, absolutely nothing you can do about that, because they'll just fall back on their rules, which are don't trade around high impact news events, right? And I know this because I've been through it with them. Okay, so just don't do it. If you obviously have a position down, you know, if you're all the way down here and you're just holding positions, that's different, right? That's different because you're not going to get caught up in the volatility because your stop and TP isn't in that place, right? But if you're entering, in here, right, or entering in here, and you've got a position like this, right, you're opening yourself for a can of whip ass, right? Where it can do that, and by the time they've released it, right, they've triggered you here, so you're now net one short, right? And now you're all the way down here with a negative position. Okay, so you've got to be really, really careful. So there you go. There's a little overview of how prop firms work, and ultimately why I think that their days are numbered, right? Why their days are numbered? Because on the other side of this, you've now got the institutions, right? And the market makers, right? So the traditional route of money would be this person would have 15k or whatever their balance is, and they'd put it into their direct to market brokerage, which would then go more times than not, because you're a new trader, would just get lost inside the market. Why is that an N? That should be an M. Right? That gets lost inside the market, which is ultimately controlled by the institutions, right? That's the flow of usual money. That 15k goes into the direct market broker, goes out to the market, goes into the institution's pocket, right? And that is like trillions of dollars, trillions. What these guys are doing is essentially a dam on that. So all of these institutions have now got this dam that's stopping the flow of money. So what is now happening is that these people have now got their 15k, they're putting it into this direction, but these fuckers aren't ever putting it into this because it's synthetic money, right? It's always synthetic money. It's not real money that you're trading. So this 15k is now going back out into the prop firms, and like these fuckers are like little people just create this software in like their fucking sheds, right? And it is millions and millions and millions. I'm talking billions. You know, I think Apex was like 300 million last year. That's just one prop firm. So all of this money, which went through this traditional route that would ultimately go into the institution's pocket, is now going out into all these different prop firms, right? The trillion, you know, those billions and trillions are now going out into these prop firms. So it's a dam on the actual market. That ain't gonna last. It ain't gonna last. So they're either going to remove prop firms, and I think that's a struggle because of the different jurisdictions, right? So a lot of these prop firms are now cute, where they're setting themselves up in Dubai, which is a completely different jurisdiction to the US, so they can't really control it. Or they can just axe out the ability to trade futures altogether, which for me is probably more likely, right? It's not so long ago that you couldn't trade futures. So for me, you know, you want to, I'm not trying to scaremonger any of you at all, but you know, you want to be, you know, getting your money out as quickly as possible and getting it into a direct to market broker, right? That's what you want to be doing, right? So you want to be taking this money, ideally money that you get back out, and going whoop, straight over here and doing it through the traditional route. And if they end up getting rid of futures, at least you can then go to options, or you can go to stocks or whatever, right? You have another way to keep it as your career. But these days are numbered, where these fuckers take all this money. It's not going to last a long time. It has a massive impact on the money. It has a fucking huge impact, because ultimately it's not paper money to the market's view, right? This is real money. The money that you're putting into that prop firm is real money. And that money is the money which the prop firms are siphoning off. That's real money. The fact that this is synthetic is irrelevant. It's the flow of the actual money, right? The money going into the prop firm going directly back out of the prop firm because you keep blowing your account, right? And now and again, you might get a little payback, all right, for most people, right? Unless you're a solid trader, then you start getting payouts. By that time, you know, they start copy trading your account, so it's different, right? But more times than not, that money's just going straight back out into their pocket. That is real money. Real money that would usually go into the direct to market, go directly out into the market, into the institution's pocket. So the fact that it's synthetic is irrelevant. Paper money is irrelevant. It's the flow of the real money. Make sense? So it's not going to last. So enjoy it while it's here. That doesn't mean go YOLO. That doesn't mean just full port today. Right? I get X says it's over tomorrow and it's full port. Yeah, I think it's highly likely AP. I think they'll probably, the more likely route is they'll just axe futures altogether. But then you've always got options you can fall back on, right? And then you can always trade options using the futures chart. So there you go. There's my case in point, right? So all those little inverted fair value gap motherfuckers out there who just piling this to go run out all this liquidity have just had their ass handed to them, right? Patience. So at the moment, I'm looking at 225. That's my point of interest on NQ, if you trade NQ, which is mitigating this range on the high, up at 62% on the daily dealing range, taking out the previous day's high, taking out the SMT on the high on the hourly. Think or swim. One day I'm going to trade think or swim. I'm just going to move to America just so I can trade think or swim just for a day. All right. I don't know why they don't let us Europeans trade toss. I've got no idea. What's your beef, toss? What's your beef, think or swim? No, we can't trade toss. I don't know why. They've got you can only use it in the States. Swiss people, okay? Well, I know you can't in the UK. No, is it a load of turd? Is it? I think think or swim use dark pools as well. So if you trade, especially if you trade stocks and stuff, it's all dark pool, right? You know, so you can get slippage on toss if you trade stocks. Like I think the best routing is through Arca on toss from memory. So news in 1 minute. Don't feel like you have to jump into anything straight off the bat. Patience, guys. You've got all day to find a trade, right? We've spoken about this, right? So everyone who went short on this little inverted fair value gap on their little Twitter streams is now like panting and sweating, right? They're already down. They're already negative. Right? A little bit of patience. That's all it takes. Just a little bit of patience. So the actual S&T, let's just bring on the hourly back. Yeah, so it's on that 82 high. So this price gets above that 82, I'm not interested. So 22, so mitigation on that range on the high on the hourly is where I've got an interest. S&T on 104. You sure? You sure about that, broski? Oh, that tiny little one there. Yeah, not for me, bro. Not on that little between two candles. I hear what you mean on this low right here. Yeah, I hear you. It's just it's delayed SMT. It's delayed SMT. AP. Delayed SMT, dude. Poor trade balance, what do you mean? Oh, I'm here with you. I'm with you. It's just what they're going to use to bullshit the marketplace, bro. I don't really care what they say. They can say anything. It's still going to go where they want it to go. Poor trade balance. Yeet! All-time high. Yeah, we had that built in. Yeah, it was all built in. It was all built into our modelling. Yeah, of course it was, mate. Of course it was. Fucking Terry in the office just had the order to smash the nuke button. That's all he had. You ready, Terry? You ready? Negative news. Smash the buy. That's how it works. That's how it works in reality. Not them sitting in the office going, 67 billion versus 63 anticipated. I think we need to move it down 100 points. Bullshit. Right? It goes where the algo wants it to go. To cause maximum pain for retail traders. And retail at the moment are going, resistance, double top. Good luck with that, buddy. Good luck with that. We've got negative news. 67 versus 63 expected. The short. Double top resistance. Yeah, alright. Yeah, alright. So I'm not doing anything unless we get to 225. I ain't doing jack. 225. 225. There's potential like a 10 handle scalp, literally on a turtle suit on this high, right? Just to trap retail, right? As like an early inducement, you know. So you can potentially take a little, like a little 10-point scalp off that high if you really want. But I'm just gonna stay patient, wait for 225. But it's likely that it gets up here and it has a little pullback. Right, so this is when this is like, I hope you're learning stuff today. I genuinely hope you're learning stuff today. Like, even if you've not taken a trade yet, I'm hoping you're learning something, right? These are the days where most neophyte traders get their ass handed to them. They give back all their gains, right? They see a turtle suit, right? They're like, oh, let's go, let's dump these, take out these lows. Oh, shit. He's got to go now. Oh, he's got to go now. Right, dump, 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 dump. You plonker. You plonker. You absolute plonker, mate. I wonder if I get banned on YouTube for saying plonker. That'd be ridiculous, wouldn't it? Roddenay. What's that? Roddenay. Only fools and horses. Still not going near this short. Still not going near it. What's up, bud? What's up? What's up? So the very fact that ES is now taking that high is even more confidence that ES is going to go run this high. Right? The fact that it's gone and taken that high. ENQ is not even taking that high. NQ is going to go run this high. What's up? What's up? What you saying? Yep. It's 50% of this unmitigated range on the hourly at 670.5. On the premium side of this hourly of the daily dealing range. Looking to take out these highs. So there's SMT on that high, right? So we know that ES has already gone and taken this high. All right, you look at ES here, right? This is the divergence on the high. And ES has now gone and ran that high. So NQ is going to play catch up to take this high out. Yes, it can do this. It can induce retail short, blah, blah, blah. Not for me. Not for me. Oi! Guys, I really need the toilet. Just bear with me. I'll be back in a second. Sometimes reading the news is absolutely wild, right? So in the UK, we've got this news headline, and it's like this woman and her partner called Constance Martin and Mark Gordon. They're being done for manslaughter by gross negligence for manslaughter of their baby child, right? Anyway, somehow she's trying to get out of it in court, and she's like, all I did was show my baby love, right? And then the very next line it says, her body was found in a little bag in a shed in Brighton. How the fuck? How is she gonna get out of that? Yeah, all I did was show my baby love. Yeah, what about the bit where you put it in a little bag and then put it in a shed? What about that bit? What about that bit? What you saying? I should have shopped in Waitrose. What you saying? What you saying? Should have shopped in Waitrose or something? Do you know what I mean? God, to be a judge. As soon as those words come out of her mouth, I'll be like, you're going to jail for 100 years. You're going to jail for 1 million years. 1 million years. Right? You absolute rat. You're a rat. All right, you're a ratter. So yeah, are we enjoying retail getting slammed? I am. I'm enjoying watching it. Right, every time we go, oh, we're going, guys. Oh, we're going, guys. What an absolute tickle of the balls. What an absolute ball tickle. Right, and in reality, we're looking for price to come and drive out this SMT on this high, because we know that ES is going to run this high. So we're looking for ES to play catch up on that high. If you're shorting this, you're a doolally. You are doolally. Sometimes AP. I have a full university, bro. I have a full-blown university from exactly how I trade, from context, schematics, time, price, entry models, the whole lot, the whole shebang. It's not on YouTube though, bro. I have to say, it's not on YouTube. It's on my it's inside Red Pill Trading. Inside Red Pill Trading, where I trade and teach every single day, live. But you don't have to join if you don't want to. If you just want to get the basics and learn about protected highs, protected lows, you can do that all on my YouTube channel. But if you want to go down the rabbit hole and actually learn like a pro how pro trades, then I have a server for that. I'm joking, mate. I haven't taken. Oh yes, AP, get in there, son. That's what I like to hear, mate. A little bit of patience. What I want to know is if Yaz has taken a trade. Yaz, have you taken a trade yet, or are you sat patient? Yaz, are you sat patient still? Or are you trading? Where's Yaz at? Yaz. Yaz. Don't go silent on me, Yaz. Yaz is just sat there in the corner rocking. But he said don't go short. He said don't go short, and I went short. Just rocking in the corner, in the dark, naked. Right? Don't know why I said naked, that was weird. It's basically what I do. Whenever I take a losing trade, I just go turn my lights off, sit naked in the corner and rock. Oh, Yaz, come on, mate. Come on, son. Come on, son. God damn it. God dang, yes. I want to know how many evaluations are being blown as we speak. How many people are losing their accounts and just losing their shit. And reset. So we're looking for E and Q to come and drive out this high. This is delayed SMT, guys. I teach this inside of Red Pill. It's called delayed SMT. Can I draw a straight line? Come on. Come on, wrist. Come on. Come on. Come on. It's as good as you're going to get. It's as good as you're going to get, folks. You breathed, Yaz. That's what you did, mate. You took in oxygen. That's enough. It's enough to wind us up, bro. It's enough. Don't forget, no trade is a position. No trade is a position. Right? People think you can only go long or short. No. You can also do a big fat donut and not trade at all. Believe it or not, that is a position. God forbid. God forbid you sit patient and you don't trade every 30 seconds. Wow, can you imagine that? Can you imagine when you get to the position where you have enough discipline and patience where you can literally wait for a high probability trade entry that meets rules and criteria? Fuck me. Can you imagine when you meet that euphoria? Can you imagine when you actually get someone who can show you how to do it? Where everyone, you know, people are trying to go, oh, let's go short, let's go long, let's go short, then long. What are we doing now? Where are we going? Are we going up? Are we going down? Tell me. Or I think we'll get down to this area, right? And we'll look potentially in here for a long in this area, right? No. I want 225 or nothing. $225 or nothing. $225 or nothing. Don't forget, what can happen is, as I mentioned before, you can get up to this little high and you can get like a little scalp for 10 points. I don't suggest it. I don't recommend it. But it's likely that they induce a false top. X was asking if you stood patient or took a trade. Did you what? Yeah, that's what I want to know. Did you take a fucking trade or not? Jesus Christ, mate. Wake up. Smell the coffee. This is the hardest part. FOMO tilt is like being a junkie. Keep calm, everybody. The thing is, I don't have FOMO. I literally have no FOMO. I know where price is going. But does it meet my criteria for a low risk entry to get in sync with price action here? The answer is a big fat no. So this is where I don't trade, right? Very fucking simple rules, guys. And I am gonna swear because I'm getting juiced up, right? If you are going long, you want to be long inside of a higher time frame discount. So inside of the daily right here is where you would have been wanting to go long today, right? All the way up to fair value would have been your last low risk entry, okay? So today, all of your low risk entries were inside of a discount on this higher time frame dealing range, okay? So I spoke earlier this morning about my 5-minute continuation model, and I traded this morning long this morning. Not on this SIBI, but after going out of discount of the 1-minute dealing range, and then took a short on a 5-minute dealing range up here, back down to the SMT on the low. So those were my trades this morning. But in order to go long, you want it to be long inside of a discount. And this is one of my models using a 5-minute SIBI after a purge are inside of the accumulation high on a buy side of the curve when you're in an aggressive buy program, searching for a higher time frame pool of liquidity and inefficiencies in price, right? Bosh. So your low risk entries are in here. As soon as we get above fair value, we are now technically in a premium. So a higher time frame premium. So anything up here, even though I see entries, right? Discount, turtle suit on a discount, right? For those inside Red Pill will know what I'm doing with this 1-minute dealing range, right? Going outside of a premium of a dealing range, right? When price is in a bullish buy program, like all of these things, right? I can see trades. I can sit here and trade every goddamn swing, and trust me, I've done it, and you guys have seen it. If I really want to do it, I can do it. But I don't want to do it because it's not in alignment with my overall principles in how I trade. And so now we are inside of a premium. Technically, you are now looking for shorts. Well, I don't want to go short here. I want to go short once price takes out this SMT divergence on the high and gets up and mitigates this range on the high. So unless it gets up there, I ain't trading it. Because for me, this isn't cooked. All right, so all this is doing is just inducing retail into believing the market's going down. Yes, we can get a pullback for like 30 points or something like that, but it's a gamble. You're gambling, right? Right, the overall objective for me, the overall draw on liquidity is that SMT on the high. Well, we've not done that yet. So trading anti to that before it's taken place is gambling. Hey, guess what? If it doesn't get up there and run that SMT on the high, there is no trade for me. And if that happens, I'm absolutely fine with it. So if price decides to absolutely carve off here at the open, okay, I missed the trade. I missed the trade, but you know what? I didn't burn myself 15 times trying to short here, and I'm not in a negative equity of 3, 4, 5 grand, right? I'm in positive equity. I'm waiting for my entry. I'm staying patient, and I'm trading with my overall objectives, which is to get into a high time frame premium, looking to mitigate your range on a high, looking to run the SMT divergence on the high to then look for a short. In what is clearly a buy program, aggressive buy program, searching for inefficiencies, imbalances in price, and higher time frame pools of liquidity, right? So technically speaking, yes, we have run the sell side of the curve's liquidity. Yes, we have filled this inefficiency, this SIBI, which funnily enough is now acting as support, right? This SIBI, Bosch, right in here. So this order block is now acting as support. This is another form of unicorn, by the way, for though it's my form of unicorn. So if you have a SIBI at a pivot high supported by an order block, this is a another form of unicorn, right? Like the same as you get a breaker block with a fair value gap with an order block is another form, but it has to be at a pivot high, right? Right? So where's the next pool of liquidity? Well, if price is still aggressively driving and we have a reason onto this high, I'm still going to wait for it. This SMT divergence on the high. What SMT divergence are you talking about, X? This high. This goddamn high. So ES never turtle suits. Never turtle suits. It only plays catch up. So the fact that ES has gone and ran this high, right? A high it's already taken. You trust me when I say NQ is going to go and run that high. Just trust me. So there's absolutely no chance in hell I'm going to trade this short here. No chance. Zilch. Even if, technically speaking, these are weak lows as they formed inside of a premium of this 1 minute dealing range, right? Technically, these are weak lows, right? They formed inside of a premium of this 1 minute dealing range. But if it is to do that, all it's going to do is come back down to then repopulate to move the market higher. I'm not interested in this, guys. I don't give a two shits about that. It's also low probability. Right? Used car sales, they're going down, mate. They're going down. Electrics are taking over. You only need to look at the earnings seasons for electric car companies, mate. And that'll give you your clue. Morning sugar tits. So what we do have now is engineered liquidity, these lows. We know that these are weak lows, right? This is now your 15-minute dealing range. So this low is put in this high. So what can happen at the open is price dips back down into, sweeps this internal range before moving higher again. But I'm not interested in trading that because it might not. It could just continue ripping until we get up to 225 and then we can look for a short. But you do have engineered liquidity on this low now with weak lows on this low. So you got 2 minutes or 1 minute left on this hourly candle. Not cool, bro. So this is back down into a 1 minute discount, right? So this low which put in this high, that closed above that high. Not by much, but by 1 tick. So price coming back from a premium back down to a discount on this 1 minute dealing range. Which is also the same as the 5. So all of these, if you're like hyper bullish, but you know, you'd be stupid to do it inside of a premium. So remember I was talking about engineered liquidity. So for me, I want to see if price wants to get back down into this little unmitigated range on the low at the open. Should be... So if you have engineered liquidity and you're still anticipating bullish price, you want to look for a 15-minute order block underneath engineered liquidity for price to dip back into that order block for continuation. So this would be offset accumulation, right? So essentially offsetting those on the right side of the move, but accumulating their positions to then drive the market higher, right? So this is offset accumulation. So this is your 15-minute dealing range. This low and this high. Also got SMT on that high. So again, I wouldn't want to go short with that on the high, with ES doing the total soon. So one thing you can look at is literally a tiny turtle suit on this high, anticipating a little pullback, right? I won't be doing anything until then. Or you can wait for 225. Because naturally they're going to come up here and then just adduce retail that this is a double top of a slight pullback before continuing. Guys, if you're watching on the old Twitter, feel free to join over on YouTube if you want. If not, if you found value today, consider giving us a little follow or giving the little stream a like. If you're watching on the old Twitter, if you want to just give the old stream a little like, that'd be appreciated. It'd be very kind of you if you found value. If you haven't found value, feel free to put "this is absolute turd." You know, you're welcome to do that as well. But if you have found value, a little thumbs up or a little like would mean something. Would mean a little something. Or not. Or not. You don't have to do that. You don't have to if you don't want to. Right. Not got you at gunpoint. Not got you at gunpoint, so don't worry. Dee 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 dee. At gunpoint, don't worry. I don't know what the delay is on Twitter, if there is a delay. Doesn't say. I can't tell. I can't tell. So if you got a delay, you got a delay. Don't blame me. Alright, don't blame me. I found peace in here today. Namaste, D-Mel! Namaste, mate. Oosh. That's what it's all about. Earning, learning, chatting absolute garbage. Not getting caught up in this BS. And the idea behind this is by the time it gets to target, retail traders or people who don't know what they're doing, just following absolute trash, like if they're following Tanya Trades, for example. And who are just going short on this. I know, that was harsh. I take that back. Tanya, I love you. But you are Robin, right? You just need to remember that. Right, who are just trying to short this. Constantly getting their ass handed to them, right? Whereas we're just sat here in a meditative state, just staying patient because we know what price is doing. We know where it's going, right? We know where it's going. If you want to be hyper aggressive and enter long inside of a higher time frame premium, inside of discount ranges, be my guest. Be my guest, because we know where price is going. But it's high risk because you're now inside of a premium. If you want to do it, you want it to be where we were earlier on today, inside of a discount of the daily range or at fair value of the daily range. These are your opportunities to get in, right? Now we're above 50%, it's now high risk. But that's not to say that price isn't just going to keep going. Premium discount as it works its way up to the high. For me, I'd be a little bit cautious now that you don't get offset accumulation at the open back down into a discount to then drive price higher. So if you're holding positions long here, like that's a little bit stupid. That's just a little bit stupid. All right, so you've got this 15-minute dealing range, this low, this high on the 15. All right. This is your 1 minute protected low. Which is also the same as the 5. So if it wants to run into the high, back down into the lows, it can do that to continue. Just offset accumulate. However, for me, I'm just waiting for the highs to get around. Because I'm not in a long at the minute. It's too risky up here. It's too risky. 2 seconds. So even on a classic buy day, right, just in terms of schematics, you'd anticipate a sweep at 9:30, right? You'd anticipate a sweep. So even if price is going to continue high, you'd anticipate a sweep at 9:30. ES has taken that high now. Jeez Louise. ES is not messing about today, is it? So again, you want to be very, very careful. You don't want to be going short. We've now got ES taking this high out. Oh, there we go. See you. A bob tit snatcher? What about a robin redbreast? Is that on the cards? Yes, sir. Yes, sir. It is. Just fully open indeed. I'd still like to see 225. I still want to see this range on the high get mitigated. Tuesday. But if you took that short, so I said one tick above that divergence on the high, you could look for a little pullback short. So there, that's your range, right? So you got your little 10 points or so. So again, back into a 1 minute discount. Fair value. Don't forget you got Powell speaking as well at 10, right? You got that old boy testifying. That old boy. Smart money divergence, yes sir. That's what we've just been playing towards, right? The hourly SMT on the high. Smart money technique is what it's traditionally called, mate. Not smart money divergence, but horses for courses. Yeah, I know he can't keep himself off the stage, mate. Do you know what I mean? He just can't get off the stage, that bloke. Once they've got his engines turning, they're like, let's get the most out of him, right? Then we'll stick him back in the incubator for a week or two. The Fed is really committed to bringing down interest rates and for the long-term prosperity of the United States. Go back to sleep. Just press the button on the back of his head. Technique or tool, yeah, he wasn't sure what to call it. I think they should call it smart money titties. Right, just for shits and gigs. If it's not got a name, you can make it say free reign to make one up, right? Smart money titties! Oh yeah, hasn't this been fun this morning? Hasn't this been fun? Well, I hope I've kept you out of getting your ass handed to you this morning. Because I know if you weren't on this stream, you'd probably have had your ass handed to you. So that's the previous day high tagged. Go bad. Give me my OJ. Give it to me. Give it to me. Give it to me. Everybody's short 200. Everybody's short. That's got to be resistance. It's got to be resistance 200. We're so extended, guys. Let's short 200. Nope. Midget, enough, mate. I do not want your Botox in my face. I do not want the Botox in my face. You hear me, boy? You got double top on ES and you got a turtle suit on NQ, so it can go short from here, right? It can go short from here. But I'm waiting for my entry. I want 225. I want to mitigate that range. You're back, are you, mate? So I mean, you got this double top on the high on ES, and you got that turtle suit on NQ. So there is grounds to look to take price down into a discount, but I'm not gonna do that. I ain't gonna do that. I ain't gonna do that. It's too clean off the open. It's too clean. And also people just retail, just looking at 18.2 as an area to go short just because we're so extended. I just feel like they're just going to go, nope. So this low is still your 1 minute dealing range, right? Because at no point have you got a high that's been put in. So price is just literally just coming back to fair value on this 1 minute dealing range, right? This low which put in this high. So you've now got SMT on that low. So if we reject off 25, this is going to be my target. Stop me. Come on, dude. Come on, buddy. Showtime, baby. Ah, posh! Make sure you pay yourself. I hope you got your little 20 handles. Because I don't want to see price go above that high. I want to see it get down to 157. I want to see it take out this low. Are we printing or are we printing, guys? You let me know. Are we printing? Are we printing or are we printing? Are we getting out the lobsters or are we going to get out the lobsters? Posh. Let me see the yeets in chat. I want to see yeets in chat. If there's no yeets, we're dead. You're dead to me. You're dead to me. Are we yeeting or are we yeeting? Ah, posh. You let me know, guys. You let me know. You let me know, guys. Right? You let me know. If anybody else out there is giving you the very fucking high to the tick, you won't find anyone. Nobody does what I do. Nobody. Get used to it. Let's go, baby. We're looking for 58. You're going to terminate your trade. You're going to be done for today. All right? You're going to be done. You've just taken over 100 points with me. There you go. Signed, sealed, and delivered. Use that money. Fucking spend it on a Red Pill University entry, right? Just get yourself the fucking yearly subscription and change your life. Trust me. You think what I teach on here is a lot? It's not even scraping the barrel. That is the very high, guys. The very high. Right to the tick. The very high. Come on. Let's get some likes up in here. Right, let's spread the love. 21 likes. Is that it? 21 likes. And you've just bagged probably well over 2-3 Gs. Or if you want to go and trade with MyFX, DFTFX, whatever his fucking name is, who struggled to take a 5-handle range, right? And it may be, if but maybe, go there. It could go there, it might not. You know, it's whatever the weather's doing that day. Or God forbid we've got moon phases. Alright, we start getting moon phase bid. Right? But guys, come on. Let's get some likes up in here. Right? We've stayed patient all goddamn morning. We've waited for 24 to go short. We've not been going short here, going short here, going short here, going short here, going short here. None of that. 24 to the tick. Not if buts and maybes. And I'm not being an arrogant twat, guys. It's there. It's in front of you. I'm just being honest with you. If you want to learn how to trade, I can teach you how to fucking trade. You're going for 57, then you're going to terminate your trade. You're going to go yeet, and then you're going to go thanks very much, X. Now what do we do? We play Strike. That's what we do. Bagginsville. Guys, I hope you are printing. I hope you are making money. Because you should be. But that is mitigation on the hourly range to a tick. And you're going to mitigate, you're going to terminate yourself inside this fair value gap. And then you're going to move to the sidelines whilst everyone fucks themselves in the chop as Powell speaks. If you want to hold a runner, hold a runner. Be my guest. Posh. What is that, man? Posh. Thank you and good night. If you are not already following on me on YouTube, do yourself a massive favor. Give us a follow, give us a like, give us a thumbs up, do something to show your appreciation and support. Do something. If anyone's listening or watching on YouTube, consider smashing a like or a thumbs up. Are we eating or are we eating? Let's bring out the lobsters. Let's go, baby. To a tick, guys. To a motherfucking tick. You enjoy our little ride, guys? You enjoy our ride this morning? So, oh my word, let's just fucking die. Are you not entertained? Ah, guys and girls, that's what we do. That's what we do, guys. That's what we do, right? It's what we do. So I hope you had fun on this stream. I hope you enjoyed yourself. I hope you managed to capture something. Did we not get in on the exact high? Oh, so where's your little 1 minute OTU traders? Have they even woken up yet? They're going, okay guys, we've got to break a structure here now. We've got a market structure shift. Let's look for a return to an OTE for continuation. Let's do that. We are in. We are out. They've not even got into their trade yet. That's the difference. And I can teach you how to get in there. Monetary risk versus perceived risk. Everyone on YouTube bangs on about perceived risk. Oh, but if you don't know, if you don't have any confirmation, how can you know to get in up here? My job as a trader is to manage money. Manage money, right? Manage money, so the least possible risk is here. My stops are 3 points. I have a 3-point stop, right? Monetary risk. I don't care about perceived risk. I care about monetary risk. The lowest possible monetary risk is a primary entry. I'm a primary entry trader trading turtle suits. Accumulation, manipulation, distribution. It's how I trade. Get used to it. Into a higher time frame point of interest. Mitigation on the higher time frame range at 70.5 on the daily dealing range, taking out the previous day's high. Accumulation, manipulation, distribution, right? Using the morning macro to do it. Having that level all morning. Having the SMT on the high is why we were driving up there in the first place. That's where I am getting in. There. On a lower time frame, you can dial in entries. I'm not going to go through that on YouTube. But there was a little trigger here on YouTube. If you're for red pillars, you'll know what the trigger was there. If you look at the difference between ES and NQ on your 15-second chart on this very high, that's your trigger. Okay, so then we break and take out this low. Boom. See ya. Because we know that we have accumulation, manipulation. What comes after that? Distribution. What do we have on this low? A little SMT with ES. Guys, there's levels to this. Right? So primary entry is the least possible monetary risk, which is all I'm interested in. Perceived risk is without confirmation that you've got to break a market structure. How on earth can you know where to get in here? Well, someone who trades with perceived risk is now looking to get in here. So where the fuck are they placing their stop? Are they going to place it inside this fair value gap? Are they going to look to place it above this high, thinking it's an intermediate term high, which it's not? Are they going to look to get price all the way back up to this inverted fair value gap? Or are they more likely just going to go, you know what, fuck it, let's just place it above this high? So their stop is like this. That's their red zone. Hell no. Right? And their stop is right here. Well, guess what? It's more likely that price is going to go and turtle suit that high. I don't think it's going to happen today, but it's more likely it is going to do that. Whereas us primary entry traders, our stops above here. So even if it comes up here on our runner, lamb to slaughter, as I call it, it's unlikely to tap it out. And if it does go through this range, well, it's probably going to go move up into a deeper premium, right? Right. So us primary traders, right, if you trade like red pill and we are turtle suit traders, we're getting in on the turtle suit with the lowest possible monetary risk on a primary entry. This is where we get in. We pay ourselves inside distribution and we are out the majority of our position before Twitter get in on their position, right, which is looking for, you know, their OTE bollocks, inverted fair value gap bollocks, right? We're already paid 2-3 grand. Right, now all I've got is a runner. So if I'm up here with 3 cons, right, and I paid 2, and now I've got 1 floating, my 1 is still up here. Right, whereas these guys are getting in here with 3, and they've not even paid themselves. Right, So there's levels, guys. You make the decision. If you want to go and trade inverted fair value gaps and all that garbage, you be my guest. There's people out there who can teach you that. I'm sure if you want to trade an OT, there's people out there who can teach you how to trade an OTE. Bleh. If you want to trade primary entries on a turtle suit and now know how to get in on the very high with having a literally no draw fucking down, I'm your guy. And if you don't believe me, ask anyone inside Red Pill. I literally do not care. Ask any of them. Ask any of them. So, that's going to be it for me this morning. We've bagged our tags, bagged and tagged on the very high, the very, very high. We've stayed patient all morning. Yes, we could have longed it up there, but we decided to stay against it because we were inside of a premium. If we were long, our low risk entries would have been 50% of the higher time frame dealing range or a discount. So we stayed patient, waited for our short. Our short was validated to start looking for a short once we took out this high. I spoke about what you could do is look for a run on this high for a little pullback for your 10 handle range. What did we get? We got that little pullback for 10 handle range and we took that high. But then I said, what we want to do, what I'm waiting for is 24. So we get up to 24, which is what? Which was mitigation on the hourly range, which was 70.5 on the daily dealing range, using accumulation, manipulation, distribution at the open. So this is A, this is M, this is D, to get in sync with price. Bosh, signed, sealed, and delivered. Thomas Answer, I signed up a couple of weeks ago. We do this every day. Yes, sir. Yes, we do. Yes, we do. Yes, sir, we do. So, Twitter, YouTube, I'm going to call my session here. That's it. I'm going to go jump back into Red Pill, trade the rest of the session, maybe look for something later on in the day. But I'm basically done. Right, I've hit well over my daily goal. If you're with me, you should be over your daily goal. What should you do now? Now that you've bagged and tagged, you should just sit still. Don't go, where are we going now, X? Where are we going now, X? Right, you want to trade in peak performance. Peak performance means you need to give yourself a breather, right? Because it takes a lot of mental capital to sit patient, wait for price, not jump in, control your emotions, wait for price to get to your level, execute on your level, hold through terminus. That's draining, right? What you don't want to do is immediately then jump back into a new trade because by that time you're fatigued. So what I do is I just chill. Once I've just bagged 4 or 5 grand, I chill. Trust me, I just chill. Okay, so am I looking to jump in this short to go and trade continuation? Fuck no! I'm done. I'm out of here, right? I'm out of here. Okay, so I'm going to go jump back into Red Pill, chill out with my crew, and then potentially look to do something later on in the session. So if you're new to the channel, consider smashing subscribe and a like if you found value, if you bagged today. If you're on YouTube, I enjoyed your company. And we'll do it all again. We do it every Tuesdays and Thursdays. Okay, so I'll see you next time. Take it easy, guys. Yeet!